Chairman testified before the Senate Banking Committee Wednesday and then the House panel today. Stocks initially took a hit, but began to bounce back. Here's One America's Natasha Sweet.
From gas prices to the cost of food rising, the current state of the economy has some worried. And with interest rates on the rise, how does it affect consumers? For more, we turn to John Iammarino, president and founder of Securus Financial. Thanks so much for joining us, John.
Thank you, Natasha.
And so we know people have been very vocal about food and gas prices. So the inflation we're seeing seems to be taking a toll on consumers. What does this latest rate hike mean for the average American and their paychecks? Are they actually seeing a pay cut?
Yeah, well, quite simply put, higher interest rates means that when you're borrowing, whether that's for a car, a home equity line of credit, or even worse, a credit card, things just got more expensive. So I think with a lot of people in their paychecks that they're going out and they're shopping for a new home or a new car, then that purchasing power within that paycheck, on top of the inflationary pressures we've already had, certainly people, their paychecks dollar-wise may appear to be larger, but the purchasing power of those dollars is getting much smaller.
I see. And so Jerome Powell, the Federal Reserve Chairman, appeared before the Senate Banking Committee Wednesday and the House panel Thursday. During his opening statement, Powell said the Fed is aware that its decisions impact families and that high inflation is leading to hardships for some. Having said that, Powell says an ongoing rate hike is still expected. So what are you telling your clients? Is this still a good time to buy a home or to invest? And is there still a ways to go before the market hits bottom?
Yeah, one of the comments that, that concerned me overall was they said, with the interest rate hikes, we're going to see pain. So there's a lot of differing opinions, whether we're at the bottom of the market or not. Certainly a lot of people feel that stock market valuations are more fairly valuated than they were, but the interest rates are going to add to volatility.
Congresswoman Ag Wagner mentioned to Powell the Fed underestimated inflation, and Powell agreed. Powell also contradicting the White House on the main cause of inflation Thursday.
Given how inflation has escalated over the past 18 months, would you say that the war in Ukraine is the primary driver of inflation in America?
No, inflation was high before, certainly before the war in Ukraine broke out.
Iammarino says he also believes the Fed has been behind the curve, with interest rates initially predicting to be 1.87% at the end of 2022 to now 3.75%.
So, when you're looking to buy those vehicles, the home, the RV, or the just the basic car, whatever you're borrowing, that debt just got more expensive. And when you're really looking at a home, depending on where you are in this nation, you could be adding, just with a 1-point interest rate hike on that home loan, you could certainly be looking at $100,000, if not a couple $100,000 more in interest payments.
Just all adds up so much. And
yeah.
So is this a good time to invest?
Yeah, so, we've crossed the recessionary 20% correction in the S&P 500. I have read articles that have said that, hey, people who have invested in the market when it's 20% down have done historically well. No one knows where the bottom is at. You can't really get a straight answer. I always tell my clients this. You want to prepare for a worst case scenario. Historically speaking, the best days in the stock market often follow the worst. So you're looking at you're losing the ability to really capture a lot of that recovery growth on the money you initially lost. And on top of it, with the high inflation, your dollar is getting squashed to inflation.
So is there a crystal ball of what you think will happen for us to get to the bottom?
I always tell my clients that it's important that before we get to this point, we have a plan that addresses inflation or tax hikes or market volatility. They have to understand that we're in a tough time with the inflation, the interest rates. They have to look at what they can control. And first of all, that starts with your spending, right? If you can put off luxury items, put them off. But understand that if you're looking for a home, that you really have to start, in my opinion, being more aggressive, because if interest rates only go up that much more in the future, your home price is going to get more.
John Iammarino, thank you so much for your insight. We really appreciate it.
Thank you, Natasha.
For all our viewers asking where One America